All right. Today is August 10th, 2026, and market opens in a couple of minutes. I will not be taking any trade immediately upon market open. I will wait I will wait until at least 940, perhaps till 950. This is part of my new rules to ensure that I don't take any quick trades. I'm only looking for modest trades that with 1 to 2 micros, occasionally a third one. Okay, let's look at the top-down analysis here. We're on daily, and we have these relatively equal highs. Previous week high up here. I've got all these relatively equal highs. So buy side is a very likely draw. Which is currently 200, about 300 points above where we are right now. Actually, let's also get in the regular trading hours gap here. Okay, so we've got regular trading hours. Currently we're at 29,796. So that is below here. So this is August 10th high. Not much lower, but around here. And market opened. I don't think there's any real news today. Just have a 6-month bill releases of some kind at 6:30 our time. That's 11:30 p.m. Eastern, and then at 3 p.m. is a Fed speaker. Let's take this off. All right, so we have relatively equal highs. We have a strong draw above us. We did come down into this gap here. So, we did have, it's possible that we'd retrace lower, but it doesn't seem like we'd need to go that low. Just seems less likely. We spent pre-market hours drifting. We put in from Sunday night. Let's see, Sunday night. The new week opening gap. It's over here till there. So first we drifted lower, engineered sell side, drifted higher, engineered buy side. This high at 5 a.m. came in at 984 and a quarter, whereas the prior high came in at 985, so slightly lower. Engineered these highs, just shy of these highs. This is the gradient of the what do you call it, of the daily wick. All right, so we have, again, we've got this weekly relatively equal highs above us, multiple. 1, 2, 3. This one I think took out 1, 2, 3 if you want. Okay. So looking at the hourly here, we have this high and a low and a higher high. we don't have a lower low than this. Let's see here. We have a high and a low and a higher high. Then we come down lower low. So but my bias is bullish, so I'm expecting to find support on bullish order blocks. So that would be over here. And also we have this BISI over here. So we have this 1 hour BISI. So far we've been chopping up and down here, putting in some seek and destroy action. So we also have on the lower time frames here, we have these relatively equal lows down here, which is certainly could be a target. Whoa, there we go, dropping like a rock. So we opened up here after chopping sideways a little bit from about 9:11 here, a few minutes after 9, we went sideways, expanding, a widening wedge. Opened up here. This is 9:30. All right, now we have, this would be the first presented fair value gap. It's a biggie. And we've filled in the regular trading hours gap here. I'm going to take that off because I don't think it's likely to be significant. I don't know. I'll leave it on a little bit longer. All right, the first presented fair value gap is narrowing. Well, let's all right, so this is the first presented FVG. Actually, let's make it gray. $9.34. Okay, so we came back up to the first presented for value gap, and we rejected from it. I'm gonna take off some things here. It's too crowded, and I'm sure I don't need all of this. This will leave on, extend it to the right. The Monday first presented for value gap, ICT says to extend it through the week. I take off the regular trading hours gap after all, because again, it's not, we've already filled it, and there are other things to guide us in that area. This is a 15-minute inversion for value gap bearish. Let's take that off. Take that off too. Take that off. Got relatively equal lows over here. Take that off. $9.39. We're waiting for the. This is external to internal range liquidity here. Now, if we're in a market maker buy model, then that's better. If we're in a market maker buy model, then we have the SMR, have low risk buy, have first stage reaccumulation, second stage reaccumulation, which could make sense if we're headed for a big push higher. What's this again? Regular trading hours, 50% of July 1st. Okay, that's above us. Got as high as above us as well. 15-minute BISI over there. We're on 30 minutes here. Let's take that off. Okay, my setup, what I'm looking for is a retracement into a 15-minute fair value gap, and then a rejection from it towards drawn liquidity, which we did have this rejection up over here. Okay, that was right at the start, and I'm not taking a trade until now, like, well, at least 9:40. So now I need to see another kind of entry into a 15-minute fair value gap. So I'd want to wait and see what happens to 9:45. Then we would look at a lower time frame and see what kind of entry we have. Just cleaning up still. That's interesting. Like, I would not expect a reversal over here. I would expect, if anything, that we come back down, let's say, into this breaker, right? High, low, higher, high. So we've already found support on this breaker. Review my notes. What are the thoughts and emotions that ensure I do not enter during a chop? What are the thoughts and emotions that lead me to enter a second trade too quickly or before I'm once again crystal clear on the draw and liquidity, clear institutional order flow, clear point of interest that lead me to enter to catch that next small move and or to enter with too much size? Make sure that none of this is what's I'm focused on. All right. So what we're seeing right now, actually, I'll bring up this lower time frame here. If this is actually an SMR, a reversal, I'd want to see us get up over here, build some support, and then continue up to these relatively equal highs. And I'd look for an entry, which I could take with 1, 2, maybe 3 micros. Entry would be retracement into a bullish 15-minute fair value gap, and look to take it up to the draw on liquidity or whatever makes sense. I have 0 financial target for a day. My interest is just a process. Trading positive, from a place of no rush and just positive. This could be a point of interest for a place where we would expect to see a bullish reversal because we have this 15-minute BISI. We also have this bullish bullish order block. Take this off. Mark off this 15-minute SIBI here because that's our main focus is 15-minute fair value gaps. That's our primary, at least for now. It's my primary PD array. So I'd like to see, so noticing that we respected 50% here, I'd like to see that we close above this high and even above, invert this 15-minute. Also going to keep an eye on the 5 and the 10-minute to get a sense over time as to whether I need 15 or I could rely on the 5 or 10-minute as well. I could use them as lower time frames, although I would like to remain focused on the higher time frame, actually, or whichever is giving me the clearest view. Okay, we're We're going to close over the first presented fair value gap. So if you close above that and find support, that's also a bullish sign. Even 48, so we're inside the 945 macro. We have a bullish close above first presented fair value gap. So 30 points here. Wonder if that's market maker buy model. My only hesitation is because we have this SIBI up here that we rejected off of, and it's probably smarter or safer to wait to go long until we close above that, even though it looks almost certain that we're closing above here. We could take one micro long. But it's across 5 accounts. Oh, I forgot something important, which is stop loss. Exactly where the stop loss should be so that it's 2 to 1. That's something, okay, I should not have entered based on that. Like right now, I have that, which enables me maybe not 2 to 1. Oop. Well, I kind of was moving my eyes from one screen to the other, and even though we were stop loss was inside it, I got $14 in slippage on that. Ouch. Okay. Reading my rules. What thoughts and emotions lead to enter a second trade too quickly before you're once again crystal clear on the drawn liquidity, clear institutional order flow, and clear point of interest? So I guess my initial sense of waiting until we have a close above here to go long was probably correct. Yeah. We need to wait to see if we have like right now we're in bearish order flow. I just don't know if we should expect to come down to here before we go higher. It's not clear. So my drawn liquidity isn't clear. So I have no business getting into a trade and I will not. The accounts are up $25.92 from a successful trade earlier. Small win of 40 or so dollars. One of the five is up $9.22 because I accidentally, just a technical mistake that cost me a little bit as I was just getting started. So looks like we might be going back down here. So if we don't have a crystal clear drawn liquidity on the 15-minute, then I'm not going to take any trades. And I do have these relatively equal lows over there, which we may very well be heading to. And we did come up twice into this sell side, this bearish 15-minute SIB here. We came back up again, and I could go short off of that. All right, we closed above the first presented fair value gap, and then again below. So that's definitely not, it's not bullish. So we need to wait. Let's zoom out to the 1 hour because the hour is almost finished, and actually the 4 hours almost finished. Let's see the 4 hour. I'm taking this off. Now this, we kind of went above it. So I'm going to take that off too. I think we have enough So we're inside this wick here. So not too weekly. Interesting, because we did last week, we had a really big rise, and the week before we had a really big drop and rise. Last week we're up close to 1,600 points. All right, let's go back to the daily. All right, looks like we're starting to pull higher at the very end of this hour here. Okay, we're now in the 10 o'clock hour. Let's see if do we retrace lower before going higher? So we have an open low high. And on the 1 minute here, we have all this consolidation here. So we put in some sell side and some buy side engineered. Let's take this off because we're no longer sure what direction we're going in. Starting to look like we're going more bullish. So the 9 o'clock candle is in. Now, what I'd want to see is a little bit of a, open low, and then retracing back to the open. On that note, midnight. This is midnight. Midnight opening price, August 10th. So we're in discount compared to midnight. So if the daily candle is going to be bullish and come up to here, so we're looking at, well, I don't fully understand that actually, why he uses midnight if the daily candle begins at 6 p.m. So, but the same idea, right? If it's open low on the daily candle, and then we're coming back up, we could end up making for that bullish side over there. And looks like we're coming back up to this SIBI here. I'd like to see that we close above it. wick back up into this 15-minute CB again. If we reject off of it, each time we're going lower. Now we have SMTs on both directions here, so another reason to sit tight. See how things are doing here. Let's look at the 15-minute and all of the indices. We got all this buy side liquidity up here on the Dow. We've got plenty of buy side liquidity, trendline liquidity up here on the S&P. After we came down, we also have down over here on the ES, less so, I guess. Not as, well, I guess you have both. We are kind of in a form like a wedge formation. We're putting in higher highs and higher lows and lower highs. So probably safest thing is to wait for some kind of breakout or take a modest trade on a lower time frame. Interesting here, we have a bit of a divergence between the Dow and the other two indices. ES is strong, NQ not quite as strong. YM is dropping. Interesting. I don't know how it chooses which candlesticks to go by. I guess it's see, like this one on the NQ is the lowest one on Dow. Okay. Now I probably should wait for that's much bigger, way bigger of a risk than I would like to be taking. 30 to 80, that's 50 points. Now I would probably have a bigger move, but I think that my aim is to get small wins, and I only wanted one micro because the stop loss was way too big. Looking for a 1 to 2 on my trades, and that's not a 1 to 2, 1 to 1.5. But fortunately, we were able to move that up quickly. We didn't have, I don't know if we had any drawdown. Yeah, teeny tiny drop. Okay, let's look at the left side of the curve to see how we're doing with respecting the bearish PD raise. I want to see a close above that. Do have this whole bearish order block here. So we definitely want to see that we're it's 3 minutes, 3-minute SIBI here. Okay, now we want to see, I think that's a 1 minute, right? Moved up underneath this protected low. And I do anticipate we're going to run right through it to my take profit. Beautiful. $107 trade. Perfectly followed my rules. The only thing was that a small $14 loss where I guess that was a little too early, but I didn't try to get in quickly and it didn't disturb me that I had that small loss. And that's good. All right. It is time to pause and do other things. And this is what we had. Let's just zoom back out. So we have the 10 o'clock candle so far. Opened up, put in a lower wick, open low, and now we're pushing high. And I'm guessing that the 4-hour candle, which just started, the 10 a.m. 4-hour candle, probably will take out, we'll probably get to these relative equal highs, maybe even during 10 o'clock. And then maybe we'll take out these weekly highs, relatively equal weekly highs. And we'll see what happens then. That's probably what I would anticipate today. Let me see, how many points is that? It's not so far away that it couldn't even be done today, maybe today, tomorrow. All right, I'm going to stop this recording.